Was this a week of strategic investment or a warning sign for one of the world's largest companies? Amazon shares just recorded their longest losing streak in nearly 20 years, shedding over $460 billion in market value. This plunge came as the company confirmed plans to spend a staggering $200 billion on infrastructure this year alone. Why are investors reacting so strongly to this massive bet on artificial intelligence, and is the fear justified? Welcome to Ticker Watch News for Amazon, Week 7, 2026. This is a review of the latest news and developments for Amazon based on public reports from the past week. It was a bruising week for Amazon shareholders. The stock suffered 9 straight days of losses, its longest losing streak since 2006. Over that stretch, the shares fell roughly 18%, closing at their lowest point since last May. This performance stands in stark contrast to the broader market. While Amazon stock was down about 17% for the month of February as of Friday, the tech-heavy Nasdaq 100 index was down just over 3%. The sell-off happened on high trading volume, with Amazon frequently listed among the most active stocks. The quick takeaway is that a sharp shift in investor sentiment has occurred. The market appears to be questioning the cost of the company's future ambitions, prioritizing near-term cash flow over long-term growth prospects. The dominant headline of the week was the fallout from Amazon's spending plans. The company confirmed it expects capital expenditures to reach $200 billion in 2026. This spending is directed at building out data centers, acquiring specialized chips and other equipment to support the growth of Amazon Web Services and its artificial intelligence initiatives. The market reacted with what's been described as CapEx angst, fearing that such heavy spending could lead to negative cash flow and strain the company's finances. This concern was the primary driver behind the stock's 9-day slide. Even as investors worried about spending, the company announced a major expansion of its healthcare footprint. Amazon Pharmacy plans to extend its same-day prescription delivery service to nearly 4,500 cities and towns across the United States by the end of 2026. That represents an addition of almost 2,000 new communities this year, including locations in Idaho and Massachusetts for the first time. The move leverages Amazon's vast logistics network to push deeper into the pharmacy business, aiming to make medication delivery faster and more accessible. In other expansion news, Amazon's satellite internet project, Project Leo, saw progress. A European Ariane 6-4 rocket successfully launched 32 satellites into orbit for the project. This was the first time the rocket used a 4-booster configuration, a design intended to increase its lift capacity for future missions. Finally, Amazon is facing renewed regulatory scrutiny in Europe. Italian tax police searched the company's Milan headquarters as part of a new investigation into potential tax evasion. Prosecutors are looking into whether the company failed to declare income from an undisclosed permanent establishment in the country prior to 2024. In a statement, Amazon described the prosecutors' actions as aggressive and wholly disproportionate. The market reaction this week was deeply divided, creating a tug-of-war between bearish traders and long-term believers. The prevailing narrative was negative, driven by the stock's plunge and worries over capital expenditures. This was reinforced when analysts at D.A. Davidson downgraded Amazon stock from buy to neutral, cutting their price target to $175. The firm argued that Amazon is scrambling to catch up in the AI race through escalating investment. However, some of Wall Street's most respected institutional investors are taking the opposite view. Regulatory filings revealed that Seth Klarman's Baupost Group, a well-known value investing fund, established a new position in Amazon that accounts for over 9% of its portfolio. At the same time, Bill Ackman's Pershing Square also announced it had bought a new stake in the company. These moves suggest that some influential investors see the current sell-off as a buying opportunity, believing the market is underestimating the long-term potential of Amazon's AI and cloud businesses. From a technical perspective, the stock's 9-day losing streak was a significant breakdown. Shares fell through key support levels and closed at their lowest point since May of last year.
This prolonged selling pressure suggests a strong bearish sentiment has taken hold in the short term. On the fundamental side, the debate centers on valuation versus cash flow. AWS continues to be a powerful growth engine, with revenues accelerating 24% in the last reported quarter. The advertising business is also strong, growing 23%. However, the planned $200 billion in capital expenditures for 2026 is raising concerns about eroding free cash flow. One analysis report noted that Amazon's free cash flow on a trailing 12-month basis had already declined 71% year over year. The core question for investors is how to value the company, based on its long-term growth potential in AI and cloud, or based on the near-term financial pressure created by its massive investments. Looking ahead, the central tension for Amazon stock will remain the battle between near-term financial concerns and its long-term strategic vision. The bull case, supported by investors like Klarman and Ackman, is that the market has overreacted. Bulls will be watching to see if the stock price can find a floor at its recent lows. They argue that the heavy spending is a necessary investment to secure a leadership position in artificial intelligence, which will generate substantial returns in the future. The bear case is that the spending is unsustainable and will continue to destroy cash flow without a clear immediate payoff. Bears will be watching for any further analyst downgrades or negative commentary on cash flow. Regulatory challenges like the tax probe in Italy could also add to the pressure. The base case scenario is continued volatility. The stock may trade sideways as the market waits for more concrete evidence of how Amazon's AI investments are translating into revenue and profit, and whether the company can manage its enormous capital expenditures without further alarming investors. Thank you for tuning in to this week's episode. This podcast is for educational and informational purposes only and does not constitute financial advice. Please be sure to subscribe, leave a review, and share this episode.